Good morning, everyone. Welcome to the On Time, On Target Morning Brief for Investment Fighter Pilot Precision on a daily basis. Today, we're looking at Alibaba. They released earnings on the other side of the world last night. They beat revenue. They missed slightly on earnings because of growth initiatives that they have, so unprofitable right now. But the overarching thing is that they are initiating a $10 to $15 billion, that's US dollar, obviously, in their currency equivalent of a share buyback program, which obviously, there's risk anytime you invest in China. The company, the government has cracked down on a lot of the businesses. And the first one they cracked down on was Alibaba because it's so big. So in my opinion, a lot of the negativity is behind it. They've already had their big fine and had a hard look from the government at their business practices. And now they are the company saying that the stock is so low, right around that $200 range, which again it was above 300, so it's off significantly. That this is the buy the dip opportunity. The buyback program says nothing more than a company believes that their stock is now cheap, so therefore they're going to buy it back. I kind of like, people get mad at the buyback term. I think it's more of retiring equity, if you will. So they're taking some equity off the table just by using cash they have on their balance sheet to again reduce some of the outstanding shares that are out there, or reduce the totality of the number of shares out there. So that's what they're doing. So that's what we're going to talk about this morning. I think it's an exciting announcement. And so far, the stock has been up this morning off of an earnings miss. You don't see that very often, but again, it's largely because of that. Largely because of the buyback program that's in place. All right, our topic of the day will be share buybacks. We'll kind of see what Investopedia has to say about that. Obviously, that's one of the big reasons I love Apple so much, in addition to all their great products and services, and the fact that it's considered a luxury item and it's a highly addictive product, is they're buying back their own shares. Still, they're can't buy them back fast enough. So again, that only adds to the pressure for the stock going higher versus companies that are issuing shares, again, diluting your holdings. So again, really like that Alibaba is going down this road as well. As far as our trading stuff, we do have Under Armour beat earnings today. We have a company called NINM also that has some initiatives out there, and as well as BP beat earnings, increased their dividends slightly. It's still not to where it was, pre-pandemic, if you will, but certainly on a road to recovery. It's still big energy though. All right, and the short out there I have for you is Clorox. They missed earnings and selling off hard, and it's hard to think that it's going to come back to its pre-pandemic levels anytime soon. So that's what I've got for you. Thanks so much for checking in this morning. Make sure you hit the subscribe, and hit the notification bell. And if you want to join us live in the morning, it's $25 to get in the room. I have a Q&A window and a chat window set up off to the right, so you can ask me any questions you want. And with that, let's go ahead and get started. All right, good morning, everyone. Welcome back to a Tuesday, August 3rd. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. Full disclaimer information is available at OTOTnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. Specifically looking to grow our money through exposure to a stock with, if the floor is in, and that's my contention in Alibaba, again, now you have that asymmetric risk situation where there's very little downside and there's a lot of upside. If it goes back to new highs, you're up over 50%. So I'll say that again. If you buy at the 200 range and it goes back up to 315, 320, you are up over 50% in that case. So that's what I'm looking for out of any investment, right? Normally I like that 3-to-1 ratio. I think this is even more like a 10-to-1 type ratio situation. Won't happen overnight, and of course the Chinese government carries risk with it. So risks are out there. I'm not saying it's risk free, but I certainly like the setup for it. Question of the day: share buybacks. We'll get to that towards the end. Our flow for today: long, short, open, short, long. Do a market review, headline review, and then look at BABA, the chart, and talk about where it's been and where it's going, and on what time frame. Short-term execution, and we'll get into the longs and shorts. I do like the longs a little bit better today. Yesterday was kind of a funny day in the market in that we were up almost all day and then it took a nosedive towards the end of the day. So we'll pull that here in a second and take a look. Contingencies and academic resources are standard. All right, let's go over to TD Ameritrade ThinkPipes platform, which you see right now. Coming up, here's that SPY look on the left. Again, futures were up higher earlier, kind of fading a little bit. Here's our two longs, Under Armour and BP. I think those are the best two for this morning. And then Clorox short. We'll have that pulled up here in a second. All right, as far as where we are in the market, you can kind of see there's our red day from yesterday. Excuse me, after being up most in the green most of the day. But again, we're still trending higher. The infrastructure bill is the topic of the week, if you will, to try to get that thing through. Inflation is largely faded from the discussion, and we aren't really talking taxes yet. So we're set up in a situation where the market's just going to creep higher over time. When you get into the 5-day chart, here's your 5-day, a lot of congestion, right? So a lot of stuff moving in and out. Tech has had a pretty favorable comeback, though. Other than Amazon, I got you. Amazon with the big 7% hit is still off a little bit. All right, we'll be back to our day trading screen here in a second. Let's go over to check out those futures I was just talking about. CNBC.com, I'll refresh those for you. Let's see, futures barely in the green here, but are in the green. You also see Ralph Lauren gapping up this morning, same sort of thing. I'm sure it's an earnings story. I'm going to pull that off to the side as well. So yeah, just low volume, so it doesn't fit our criteria, but they're gapping up too. So good morning for the retailers. All right, let's take a look at Europe. Fairly muted. Germany Stock Exchange down a little bit. The other two are higher. Let's see, Asia red across the board. Bonds dropped below that 1.2 level, so kind of continue to fade there, making bond investing even more difficult than it already is. Oil dropped below 70. That's the first time we've seen that in, I would think, probably 2 to 3 months. So instead of the U.S. summer taking taking oil prices higher, it's actually started to dip a little bit. Speaking of gold and silver are mixed, and in crypto world there was some selling off last night. Not a big deal. Didn't get my crypto piece out. I got a couple other pieces done last night, but that's next on the list. All right, as far as our headlines this morning, Tesla got a huge upgrade, a call that their profitability can be increased significantly. They're saying 70% upside. I think they're 70% or 100% on crack, saying something like that. But obviously they have their numbers that makes them believe that that's the case. NVIDIA is now post-split. I've said this, it's too hard to buy in here. It's too expensive, but you may never get another deal because it keeps powering higher on a daily basis, which is kind of annoying when you'd like to have more of it, but you can't get it because it's too high. So be disciplined, wait for a dip. Square obviously jumped yesterday. I would like that better actually than NVIDIA here, just because the long-term prospects of Square. All right, here's your big article on Under Armour, our earnings top estimates. So remember what happened, kind of the story of Under Armour is they were a darling for a long time. Kevin Plank, CEO, was, he was on every TV show for a long time. And then they split their shares to UA and UAA, and it was basically a case study in corporate greed, right? So did everything wrong, made the company look foolish and greedy and only there to bilk people out of their money. Obviously, nobody likes that theme. So down the stock tanks on the split, and it's literally still in the recovery process in the low 20s right now as far as the stock. I like the UAA shares a little better than UA, so those are the ones we're going to talk about today. All right, Simon Property, everybody's saying sales are back to pre-pandemic levels. Now, that's the good news, and that's why all the retailers are going up. But again, we do have the Delta variant, and depending on who you believe and how bad it is and what's going to happen, I do believe that it's certainly a thing, especially here in Austin, where hospitals are filling up downtown. Where I think it's stage 5, and I don't know exactly what that means, but everyone is concerned, where we weren't all that concerned a couple months ago, right? So if that becomes the case, I do see some negative impacts of the market, but I do not see us going through a forced shutdown. Obviously, here in Texas, we have a governor with a pretty strong opinion of keeping everything open and keeping masks off, or at least giving you the choice, that sort of thing. So we shall see how it all plays out. All right, other headlines, a negative one out of Tencent, as China media calls them opium. I'm not so sure. I mean, it's a gaming company, and I also wonder, as a member of society, if the amount of gaming today's youth or adults, I mean, I guess it doesn't have to be the youth, but the number of people that are locked away in basements for hours on end in fantasy lands, yeah, that's concerning from an overall productivity of society standpoint. But that's not to say they're not productive members when they're not doing that too. But again, certainly I do think you could get hooked on video games. I love them, so I haven't played them for years because of that very reason. Is I would love to get into it and then be basically consumed by it, but no need for that. But anyhow, that's a concern that China threw out there. 10-cent stock tanked 10% off of the media kind of calling them out there. Simone Biles bounced back and returned, bronze medal for her. So overcoming her situation earlier in the week. So that's a good success story. All right. Black Friday threatened by shipping crisis. Say it isn't so. There's nothing more American than getting up early on Black Friday and spending a bunch of money you don't really need to spend, right? That's kind of what we do. All right, let's take a look at Alibaba. Speaking of spending money, let's talk about the Chinese middle class, 6 times bigger than the US middle class, and they're spending money. Well, here's what I was talking about, is where the stock price is. Hovering down there at 180. Don't cry that you didn't get it at 185 last week, because, well, by the way, I was telling you to buy it then too. But even if you get in here, look at the upside. So you think, okay, maybe it's a $20 downside. That's what, 10% down, but you're also looking at a 60% move if it returns to its highs less than a year ago. This is a 9-month chart. So really, when you look at how expensive it is, 23 PE, not expensive, and the overall market's at around the 25 PE. Forward PE, again, if they meet all their numbers, which they didn't, they just missed a little bit. Forward PE of 17 for a huge firm, that the Amazon equivalent of the Far East. I mean, come on, this screaming buy, in my opinion. Time to load up on Alibaba, especially with the share buyback program that they have out there. You can see the stock is down no matter how you slice it, no matter when you got in. You're likely in the red unless you bought in 5 years ago. But certainly, and you look at the short float. So if there was a significant concern across Wall Street, there would be a larger short float. Largely, the shorts have made their money and they're back out. So again, positioned to outperform here. All right, let's go ahead and get back over to TD Ameritrade and set up for the market open. Good morning, everyone. Welcome to the On Time, On Target play of the day on Tuesday, August 3rd. We have 10 seconds to the market open. You have 4 screens in front of you on the TD Ameritrade platform. You have the S&P 500 on the left on a 1-minute chart. And then you have UAA long, BP long, and short. There's our opening bell. So UAA up 4%, BP up 4.5%, and Clorox down 10%. More inclined to take this Clorox short. So we're looking at a $1.50 stop. So it'd be nice if it climbed here. We got 163.75 is the high. The higher this goes, the better off we are. So 164.25. Ooh, tough math, right? 162.75 is our entry. I'm inclined to take it here pretty quick if it hits. Again, $1.50 stop. Clorox short. 162.75 is our entry. There's our entry. It just touched it there. So that's where our entry point short. Here's your arrow down to give you a reminder of what we're doing. And again, $1.50 is your stop, covering all the way up here at 164.25. So $1.50 off of 162. Our math in the morning, 161.25 is our first R. And then you go down to 159.75 at the bottom of the chart is our second R. And then I'll do the third R once it breaks down there. So again, we're in Clorox short just outside of our window, but I do like the way it's setting up here. And again, this is off a missed earnings story. Our two longs out here, the better setup obviously is here in UAA, where it's down to where from it was previously. If you're going to get into that, you have to look at a 20-cent stop. Looks like there's a buyer at 22 or 22.01. Well, we'll see if it holds here while I'm talking about it. Generally, once that exhausted, you'll see it stripe down pretty significantly. So yeah, so that buyer is gone now. So the bottom, you'd have to wait for Under Armour to bottom before turning around and taking it long. It's a much better setup than BP. You can't buy into it here. I mean, this is flopping all over the place. So keep an eye on that Under Armour. You can take it back long here in a second. Let's look at Ralph Lauren now that there should be. You can see the earnings call right here. You can see it gapping up 9%. Very light volume, so you can't really hop into here with anything, with any decent sized baseball bat and take a swing, because you're just going to consume too many shares. So nice setup, just doesn't have the volume. All right, the story we didn't look at is MINM. Again, has some products out there. We'll see what the company name is because I'm not familiar. MINM. Minim. Oh, tricky. So Minim Company, they have new products hitting the shelves out there. You can see it's below $5, so plenty of risk. They gapped up. Goodness, what's that? 50% at the highest there. Got probably not quite. 25%, I think, my better math there. They've already faded back down here to where they're only up 6%. So again, don't really think there's a huge story there, but certainly the stock is in play. Okay, so we'll go back to Ralph Lauren and take a look at that one. Under Armour's not holding, so I would say with that big of a move down, I wouldn't bother with it. RL long, you don't have the volume, so we're in the best trade that we can find out there this morning. All right, let's check on our trade. We're up at 1.5R, and again, it's going pretty well. Let's zoom out to see if we can cover that low of the day. We can't. So let me do the math for you. For that exit point is going to be 158.25. So do have that set up, the 158.25. We'll have to wait until it actually gets down there to be able to draw it on the chart. All right, we'll let that go. So pull that up on another chart there. Again, nice trade in the green so far. And we're going to talk about long-term stuff, see what's in play. All right, Clickstream is up a little bit, speculative play. TMRC also a spec. NVIDIA up a little bit, Tesla up a little bit on the news. DXC is a name that has been on fire. I should probably do a morning show on, except nobody's ever heard of it, is the issue. But DXC is a spinoff of Accenture, of executives that basically thought they could do it better. Full disclosure, I do know somebody that's involved in this who left Accenture to go with DXC because of they thought they could do it better. It was kind of some of the best and brightest left and said, we can do it more efficiently. And so far they have. So they really kind of knocked it out of the park. And I think you have a lot more upside. We'll back this chart out from the 5-day chart to a 180-day chart. You kind of see that's what you like when it started at 29 months ago or 6 months ago, and it's up at 43. Can you buy in here? I don't know. I need to do a little deeper dive, but I'm in it. It's a name that I have a chunk of, and it's so far it's been doing great, especially recently. O's another name we follow is Realty Income, kind of a nice, safer name with a monthly dividend, which people find attractive, especially if you're living off your portfolio. All right, let's see what's going on to the downside this morning. DD continues to fall. Let's see if it's probably below 10 now, right at 10. So again, when you look at this chart, a lot of congestion around 10. I do think it's a must-own stock. So if it gets below 10, you can pick some more up. K-Web selling off, that's not new. Roblox is out there selling off a little bit. Win selling off going into earnings. I think it's next week. Can't get here fast enough, right? Alibaba, so some Chinese names are down, and I don't have 10 cent anymore. Otherwise, it'd be down. We'll just pull that up. check out the -10. They bounced a little bit, so they're only down 6% there for 10-cent holdings. Used to love this name. Again, they were part owner of Epic Games, which was part owner of Fortnite when that came out and was kind of the craze. So, but left it obviously a long time ago when that story kind of played out. And again, now you have all the Chinese firm risks. So, all right, let's go back, check on our trade, see how it is doing. So it basically went down to the almost the 2-hour point, back to the 1-hour point. So again, we'll check back on that here in a minute. All right, let's talk about stock buybacks. Going to go back over to Investopedia here real quick and take a look. And it's kind of as simple as it says, right? A company is simply choosing to buy back the stock. So what does that mean? So if you have 10 million shares out there and you buy some of them back, you're reducing the float. And when I say float, and I'm doing the same thing with my company, there's certain shares that you hold back that be retained, that stay property of the company. Then there's certain shares that are basically out and they're in play, meaning they trade on the secondary market. That's called the float. So that's when companies retire the total number of shares out there. Your one share, every single share that's out there, becomes incrementally more valuable, right? Because the total shares add up to 100% of the company. So if you have a share, it's a piece of the company. And if they take one share off the table, you now have a slightly larger piece of the company. Again, this isn't moving the needle if it's, your standard retail investor, but for your institutional investors, certainly it can move the needle if they have tons of shares. And also, more voting power, that sort of thing. Most companies now, Alibaba doesn't pay a dividend, but Apple does. So every time Apple retires a share, that's one less dividend payment that they have to make. So really, if you're paying out, say, $1 a share and you retire 1 million shares, you're saving yourself $1 million a year, right? From just the dividend payment alone. All right, see what the key takeaways are. Reduce the outstanding, increases ownership stake. Those are better words than I was using to explain it. I should have chosen them. This is what companies do when their shares they believe are discounted too much, i.e. the shares are on sale. The company's like, you know what, heck with you guys, we'll just buy them back with the money we have on our balance sheet, right? Okay, so video if you want it. Tender offers, you don't see a whole lot anymore. Companies just generally just do it and buy it off the open market. Motives, there is some people that really don't like share buybacks and think that it's kind of anti-capitalism and un-American, and I don't buy that story really at all. I think it's a choice of a company. Here's the opposite is dilution. It's the opposite of that, right? So I don't like it when companies pay their executives in stock, which many of them do, because that's new issue stock. That's not existing stock. So there's all of a sudden all these more shares out there, which dilutes my position, which I don't like. Okay, there, and it does make all of the ratios basically look healthier if a company does a stock buyback. All right, let's check out on that's all I've got on that. Let's check out our trade real quick and I'll close out. Does not look like our trade's going to make it, going to close out in time. But again, when this hits, go down to the 158.25 level, which I think it will. That's only about a little over 1% away. Once it hits down there, I'll come back on the mic and close the trade out and cut it out as a separate video. All right, that's all I've got for you today. We'll see you guys back tomorrow. Have a good one.